Hello and welcome to TalentSprint again. After having seen what are savings bank deposits, we are now going to see the next category of deposits called the term deposits. Term deposits, as the name indicates, are those deposits which are repayable at the end of a certain term. They are also called fixed deposits or recurring deposits or cumulative deposits. The basic idea is that the money in the term deposits are to be repaid by the bank on the expiry of a certain term or the certain period. It carries interest at a pre-agreed rate. When you deposit an amount in the term deposit with any bank, the bank will tell you that the interest rate for this period is such and such %. For example, hypothetically speaking, today's world, a 1-year deposit from a bank carries an interest rate of around 7.5%. So that is a pre-agreed interest rate. Withdrawal before maturity date will attract penalty. Constrained to charge a penalty on withdrawal before maturity, because when you place a term deposit with a bank, the bank is sure that you will keep the money with them until the expiry of that period. But if you want the money before the expiry of the period, the bank is entitled to charge you a penalty because it goes against their plans. Term deposits are available with banks for periods ranging from as little as 7 days to 120 months. A printed receipt will be given to the deposit holder for acceptance of such deposits. Of course, even this printed receipt today are being increasingly replaced by electronic statements. You could get electronic statements offering the term deposit receipts. But however, if the customer insists, then the bank will continue to give them hard copy printed receipts. Used by all classes of depositors, individuals, firms, trusts, companies, non-banking finance companies, etc. In as much as a savings bank account is a must for all people, but savings bank account is more for individuals, term deposit can be placed by any classes of depositors. It could be an individual, it could be a company, it could be a trust, it could be a partnership firm, it could be a non-banking finance company, anybody. Different banks, of course, offer different rates of interest, but they are all within that band stipulated by Reserve Bank of India. Reserve Bank of India has stipulated a minimum and maximum band in which the banks have to offer interest on term deposit, and all the banks have to necessarily comply with that band only. Loans can be availed against the pledge of term deposits. Savings bank account cannot attract any loan because the savings bank account is used for daily transactions, whereas term deposits, let's say you have a 1 lakh rupee of term deposit with the bank, you can pledge that term deposit with the bank and avail of up to 75% of the principal amount as a loan. That loan is of course subject to the discretion of the bank. While availing the loan, the depositor has to sign on the reverse of the receipt which he has got. Interest on the loan will be decided by the bank. Interest on deposit loans will be decided by the bank concerned, and it may be revised from period to period. One thing about term deposits is that senior citizens, who are senior citizens, people who have completed 60 years of age, senior citizens will get a higher rate of interest. Most banks offer a 0.50% higher rate of interest on senior citizens deposits. Recurring deposits are nothing but term deposits, but which see monthly installments being deposited into the account regularly. These are also called cumulative deposits because the interest on these are compounded. Interest on recurring deposits are compounded. It is not a simple interest which is applied to them, but a compounded rate of interest which is applied to them. And so they are also called recurring deposits or cumulative deposits. Interest compounded monthly, quarterly, half-yearly and yearly. Period of recurring deposits vary between 1 year and 10 years. 1 year and 10 years. There is something called a tax-free term deposits. This deposit offers tax exemption under Section 80C of the Income Tax Act. A minimum lock-in period of 5 years is applicable on such term deposits. You cannot withdraw the money before the end of 5 years, and that is why it is offered a tax. That's why it's offered a tax exemption. However, you can deposit a maximum amount of only 1.5 lakhs into this tax-free deposits per year. Per year, you can deposit a maximum amount of rupees 1.5 lakhs into this cash deposit, into this tax-free deposits. Premature withdrawals are not permitted from this tax exemption deposit. Premature withdrawals are not permitted. In other words, you cannot withdraw the money before the end of 5 years, unless of course the depositor dies. Interest rates will be decided by the respective banks. The loan facility is not available for tax-exempt deposits. Unlike a normal term deposit or a recurrent deposit where you can avail loans up to 75% of the principal amount, in a tax exemption deposit, which is for a period of 5 years, premature withdrawals are not allowed, and neither is a loan facility allowed on deposits. The interest earned on this tax exempt deposit is taxable. Only the principal amount is non-taxable. If you deposit an amount of 1 lakh in this tax exemption deposit category, the amount of 1 lakh alone will be considered under Section 80C for income tax exemption. However, interest earned on this deposit will be taxable at normal rates of taxation. There are some other deposits called Flexi deposits. The Flexi deposits, as their name indicates, are flexible in nature, without any preset maturity. Basically they are of course term deposits, but amount can be switched in or to from this account to or from the SB account or current account. A Flexi deposit is one where from the Flexi deposit the money can be switched to the SB account or current account of the depositor, and conversely the money from the SB account or the current account of the depositor can also be switched into this Flexi term deposit. Interest will be paid according to the period for which the deposit has run in the account. That is natural. So interest will be paid according to the period for which the deposit has run in the account. For example, if there is a Flexi deposit and the money has been in the account for, let's say, a period of 6 months, and thereafter the money is transferred to the SB account of the deposit holder, the bank will pay interest on the 6-month period only, because there is no preset maturity, there is no preset interest rate either. I will give you another example. Supposing I have deposited an amount of 1 lakh into my Flexi deposit account, and after 7 days I transfer 50,000 rupees to my SB account. For that 7 days, interest will be paid on 50,000 rupees at the rate applicable for 7 days only. The remaining 50,000 rupees will continue to earn interest for as long as the amount is there in the Flexi deposit account. This is how it operates. To give you another example, there is a Flexi deposit of 1 lakh rupees, and the Flexi deposit term deposit is basically a term deposit account. The Flexi deposit account has not been touched for 2 years, let us assume. And after 2 years, the account holder wants 90,000 rupees to be transferred to his SB account. So, for an amount of 90,000 rupees, interest will be paid by the bank for 2 years at the rate at which the depositors earn for 2 years. And the remaining 10,000 rupees will continue to remain in the Flexi deposit account itself, and that will continue to earn interest for the period beyond 2 years as well. So this is how a Flexi deposit offers. So we have seen what is a SB account, what are the various types of this thing. We have seen what is a term deposit, what are the various features associated with a term deposit, why it is called a term deposit. It is payable on the maturity of a certain term, and how the term deposits can be either a fixed deposit in nature or a recurring deposit in nature, how recurring deposits are also called cumulative deposits, and how there are certain tax exempt deposits which are exempt from tax if you keep it for a minimum period of 5 years, and there is no loan facility on tax deposits, but however loans can be taken against the fixed deposits or recurring deposits. But in a tax exempt deposit there is no loan, there is no premature repayment either, whereas in a term deposit or a recurring deposit, prepayment is allowed subject to a penalty. The interest rates on term deposits and recurring deposits are all fixed by the government. On Flexi deposits, they are fixed by the respective banks concerned, and the banks will pay interest for which the deposit has run in the Flexi deposit account. And the Flexi deposit accounts, the money can be transferred to and from the Flexi deposit to and from the savings bank or the current account of the account holder. So this is all about term deposits, and until I see you in the next video, I'll say bye for now, and thanks for watching.